Hello guys. Before we start diving into how to use margin trading, I want to explain you why you want to use margin trading because 99% of the people who do margin trading, they are doing it in a wrong way, in a completely wrong way, and this will hurt you more than to help you, right? And this is not my goal. My goal is to teach you something that has value to you and for you to benefit from it, right? Not to lose all your money. So I want to make sure that you understand why you want to use margin trading. So here I will talk about how the professionals use margin trading and why they use it, and how the new traders use margin trading, right? The newbies, right? The people that don't really know what's going on, the people who are playing a casino, right? Because in the way that they are using the margin trading is the same like to play in the casino. It's even worse than to play in the casino, actually. In the casino, you have higher chances um, than these people who use 100x margin, right? Or even more than that. So let's dive into why you don't want to be on this side. You want to use the margin as the professional are using it, right? And how they are using it, what they are using it for. So first, they are using it to lower their risk. What risk? And as you can see, the newbies, they do the opposite. They are increasing their risk. They don't even know what's their risk, right? They don't even have risk management and know what's their risk. But let me explain you what I mean by that. So to lower risk, what does that mean? It means that if their trading account is, let's say, $100,000, they, most of them, they don't really want to keep all this 100,000, for example, on Binance. Binance is the exchange that I'm going to teach you how to use margin trading, right? So if you don't want to keep all this money online on Binance, because Binance can be hacked all the time, your account can be hacked all the time, and this money can be gone, right? So if you don't want to keep all the money from your account on Binance, you can keep, let's say, 20%. You can keep 20,000 on Binance, and the other 80,000 to be in your bank, right? And this is how they lower their risk, and this is why they use margin trading. Because when they keep 20,000 on Binance, they will still be able to trade with 100,000. They will borrow the other 80,000 from Binance, right? They will still borrow, they will still use margin trading, but they are doing it in a manner to lower their risk, right? They still have 100,000 capital, trading capital, but they keep only 20,000 to lower their risk. If something happen, if someone hacked their account or something happened with Binance, they disappear. There are some crypto exchanges that just disappear, right? When I was starting before with the crypto, and there was one exchange, good thing I did not have a lot of money, they just closed doors, right? They just disappear. And this is how what can happen, right? Especially with these crypto exchanges that are new or something like this. So the main reason is to lower risk. The newbies on the other side, their usage to increase risk, right? They have, let's say, $1,000. That's all their trading capital. They will put everything on Binance, and they will borrow money from Binance to trade with 5,000 or $10,000, right? But their trading account is just 1,000, so they are increasing their risk, because if the trade goes against them, they can lose all their money, right? So this is the first that you have to be aware of. So if you don't want to keep your money, all your money on the trading on the exchange online, this is how you can utilize margin trading in your benefit, right? The second thing is the professionals, they are strict with their risk management. They are using margin. So in order to be strict with their risk management, what does that mean? I will show you what does that mean. Let me quickly open here to give you an idea. All right, so let's remove all this drawing. I'll just give you an idea. Let's go on a lower time frame, actually on a 15-minute time frame. Okay, let's imagine that now these are the 200 exponential and simple moving averages. Let me even remove the other one so you will not be confused. I can even just keep just one, so you have idea what's going on. Let me remove this as well, and the stochastic. All right, so this is the 200 simple moving average. Price is coming down here, and then it's regaining it. So let's say that for some reason you want to enter here, right? Because you see the moving average is upsloping. I mean, basically you have reasons to enter a trade here, right? And then your stop loss is going to be under this candle. If it price starts to go below here, you want to exit. So what you will see right now is that your stop loss is less than 1% away, is 0.30% away, right? So if you have a proper risk management and you are risking maximum 1% of your account on a single trade, because I will talk in detail in another video about risk management because it's crucial, right? So if you don't understand that, don't worry, you can even find the risk management video, watch it, and then come back to watch this one so you have an idea. But I believe most of you will know what I'm talking about. So if you are risking 1% of your account, it means that if your account is $1,000 and if the trade goes against you and you are losing $10, you are going to be stopped out, you are going to exit, right? Because you don't want to lose more than 1% of your account on a single trade. What is happening here, however, is that the stop loss is closer than 1%. So what does that mean? It means that you will have to enter a trade that have position size bigger than your trading account, right? So if your trading account is $1,000, you are going to need to buy for more than $1,000 here because your stop loss is. So let me give you another, let me explain you better. So let's put here one more. So if your stop loss is 1% away, which is right here, then you will have to, if your stop loss was going to be right here 1% away, then that means that you have to enter in this trade with your full account size, right? $1,000 if that's your account. I'm just giving you an example. But since the stop loss is much closer, that means that you are going to have to open a position that is much bigger than your account size. So this is when margin is coming into play. You can borrow money to enter a trade, but your risk is still managed, right? Your risk is still 1% of your account. You might enter on a $2,000-$3,000 position, but still if you lose this trade, you are going to lose $10, which is 1% of your account. I hope you are not getting lost here. If you have to, you can watch this video more, right? But this is the second reason why professionals are utilizing margin trading, right? I hope this is clear now for you. What is happening with the newbies? They don't even have risk management, right? They are not even aware how much they are risking, so they are not even doing what I'm showing. Some of them, they don't even have stop losses, right? They are just entering. Even if they have stop losses, they are not really having strict risk management. So this is why I will teach you in another lesson why strict risk management is so important. Strict risk management. It's not a should, it's not an if, it's a must that every time you have to enter with the proper risk management. So basically this is the differences between how professionals use margin and how newbies use margin. This side here, they are playing a casino again, and when you play, let me give you an explanation in the casino, right? In the casino there are two sides, there's the casino and the player, right? And the player, in the long term, they are always losing money. So in trading, you want to trade like the casino, right? You want to be like the casino. You want to have the odds on your side, to have risk management, to know that in the long term you are going to make money. If you are going to use the margin like these people on this side, you just I mean, it doesn't even make sense to watch this course, because this is not what I'm going to teach you about, and you are going to lose this money, your money, I mean, in not the money that you paid for the course, the money that you have in your trading account, if you are not careful with the margin and you use it like these people on this side. So this is why here I have for you the reasons that you can use margin trading for, and these are the reasons that you can use it for. again, to lower your risk of holding all your money online on the exchange, just like I explained you earlier, like the professionals. What they are doing, if you have $10,000 trading account but you don't want to keep all the money on Binance because tomorrow your account might be hacked and you are afraid of this, you simply can put 2,000 on Binance and use margin trading to still trade just like you have a $10,000 account, right? The second reason, to be able to short, right? So you might want to short, not only to long, right? So this is another reason, and we are going to go into details. I will show you how exactly to short stuff. Shorting, basically it means to enter a position. For example, let me give you a, let's go back here. Let's just find a good example. Okay, let's just see here. I'll give you the same trade example. Now this is not how I trade based simply with the 200 simple moving average, but I just want to give you an example. So now you can see that you lost on the 15 minutes, you lost this 200 simple moving average. So let's say that you want to enter a short trade. Short trade, it means that you might enter on a short position here without even having the asset, right? You don't have to own Bitcoin to enter a short position. You can simply borrow Bitcoin from Binance, sell it here, right? And then buy it back at a lower price, then repay it to Binance, and the piece that is left, that is your profit, it's going to be left for you, right? But for this, we are going to, I will talk about this in details in another video. And the third reason why you want to use margin trading is risk management, just as I explained you before. When you have to enter on a position that is bigger than your account size, this is when you want to use margin trading as well, right? So let's summarize now. 99% of the people are using margin in a wrong way. You don't want to be on these sites, you want to use the margin as the professionals do. These are the three reasons that you can use margin for: to lower your risk, to be able to short, and to have strict risk management system when you have to enter on a bigger trade with position size bigger than your account. This is the reasons that you want to use margin trading. So this is it for this video.